Hi, we're going to do chapter 8 lecture. So let's start there. So chapter 8 is our chapter on fiduciary funds. So we're going to cover the PIPA. So it's the PIPA of PIPA Sea Grapes. So let's go to chapter 8 students. All right, so we have a bunch of different fiduciary funds, and I'm just going to start with agency funds and just some general information. And so an agency fund is an in and out fund. So what you'll see is you'll see money coming in, then money coming out. So what you will not see is any revenues or any expenses. And so everything is just a pass through. So we are collecting money on the behalf of someone else and giving it to someone else. So as far as a special assessment agency fund example, just to give you an example of one kind, it says assume that $1 million of special agency taxes are levied, payable in 10 equal installments of 100,000 each with 5% interest charged on previous balances. And so what will happen is we'll start off by, we're going to receive $1 million, and then we're going to turn around and give that $1 million to someone else. So we are having two asset accounts. We're going to receive 100,000 eventually, and then the other 900,000 later, and eventually we're going to pay all $1 million to the bondholders. So we're just collecting money on someone else's behalf. So asset liability. It says assume all current special assessment taxes are collected along with 5% interest on the unpaid balance. So I'm guessing there's stuff underneath here. I'll fix that for you guys. So let's change this to black. All right, so we're going to go ahead and receive the money. So we're going to receive, and let's see how much we're going to receive. It says we're going to receive 100,000 with 5% on the previous unpaid balance. And so to calculate that interest, I equals PRT. So on 1 million, 5% for the whole year, right? Right. So, so that would be $50,000 in interest. I think sometimes I get my zero in the wrong place. That's 105. Yeah. So we are going to receive 150,000 in cash. And so we're waiting to receive that. Assessment receivable dash current. Like that was the money that I was waiting to receive. And then the other 50,000, that interest, we're going to need to go ahead and give that to the bondholders. So due to special assessment bondholders dash interest, because we're going to have to pay them interest. And so we're collecting money to then give it to pay the interest on the bonds. So special assessment bondholders were paid the principal of 100 and the interest of 50. So we just turn around and give that $150,000 that we just received, we give it out. At the next year, we would reclassify some of the non-current, some of that deferred into current. So our current changed out to zero, right? Because we put 100,000 in current, but then we received it. So now we're going to move another 100,000 to current, and then we'll receive it. We'll get some interest. The interest the next time will only be 45,000, and then when we pay it out, it'll be due to on interest of 45. We'll pay another 100 in principal, and we'll go from there. So here's another agency fund example. And so this is a tax agency fund. And so meaning that we're going to collect taxes and then give it to someone else. So this would just be like sales tax, like it's similar to sales tax in a regular business. And so if I were to go eat tonight at Jason's Deli and my bill was $20 in Wichita, oops, I just did FICA because that's the tax that comes to my mind when I start typing tax numbers. In Wichita, the tax rate is 7.5%. So if I spend $20, my bill will be $21.50. That $1.50, when Jason's Deli collects it, they don't get to keep that $1.50. They have to give it to the state. And then the state will distribute it to the local governments, however it's supposed to. So same basic concept. So the Sedgwick County tax collector, so we're in here in Wichita now. The Sedgwick County tax collector acts as the property tax collection agent for Wichita, USD 259 school district, and the county's own general fund. Wichita and the school district are charged a 1% collection fee, which is passed on to the general fund as revenue. So the general fund, like Sedgwick County, gets to collect the money, and then they charge a fee to the school district for collecting it on their behalf, and to the city of Wichita, since they're collecting it on their behalf. And then it's going to be revenue for the county because they're the ones doing the work, and so they're charging a fee to the others. So the levy for the year for the general fund was $500,000, which was $250 for Wichita. So Wichita gets 50% of the revenue. 30% goes to the school, and the other 20% stays in the county. So Sedgwick County is going to charge $500,000 basically. So the levy for taxes is $500,000, and then some of the money is going to go to Wichita, some of it's going to go to the school district, and some of it stays in Sedgwick County. So at the time of the tax levy, so let's look and see the way that the Sedgwick County Tax Agency will do their journal entry. So their entry will be, oh good, there's nothing there. Huh. I wonder if there's nothing there on the other ones too. Okay, so so here we're going to do taxes receivable for other funds. Okay, and that's 500,000. And then when we collect that money, we're going to have to give it away. So we'll do due to other funds. Okay. So basically we have an asset and a liability. We're going to collect 500,000, and then we're going to give it to the city of Wichita. The county gets some, and the county general fund gets some. And so we're going to give it to the general fund of the county, and the USD 259 gets some. So assume that each government estimates that 4% will be uncollectible. So this is not an entry that the agency fund is doing, because the agency fund doesn't have any revenue because they don't get to keep the money. The agency fund is just acting as a collecting agent. So let's look and see what it would look like for the general fund for the city of Wichita. So the city of Wichita would say taxes. Oh, see, I should have known. I thought I had done good and not had that on like that. So taxes receivable dash current. And so the Wichita General Fund gets half of it, right? So the Wichita General Fund is 50%. So they would be 250,000, and then 4% of that, 10,000 would be what? Estimated uncollectible taxes dash current. Isn't that what we called it? And then they would have revenues of 240. And then to go on, USD 259's general fund would do the exact same entry, and theirs is 150. And so they would estimate 4% of it is uncollectible. And the Sedgwick County general fund, now this isn't the tax agency fund, the general fund would do the same thing. They're going to get 100 and charge, and 4% of it's uncollectible, and 96. So the revenues are not recognized by the agency fund. The revenues are recognized by the individual funds that the money will eventually go to. So during the first 6 months of the year, 400,000 was collected. Now we're waiting on 500,000, but 400,000 of it is collected. So we're going to get 400,000. Now we expected to get 500. So basically half of the money is going to go to the city of Wichita, 30% to USD 259, and 20% to the county. So what we'll do, good, I'll see if there was anything in there. What we'll do is we only got 400,000. So what we're going to do is we're going to give half of the 400,000 to Wichita. 30% of the 400,000, I think, is 120, right? $400,000 is how much I collected. So 30% of it is 120, and then 20% of it. So 20% would be 80. So that in total, we have $400,000 we're receiving. So what we're going to do is we got to go back and consider that fee, because we are going to charge a fee for collecting the money that we get to keep the fee. So the county gets to keep the fee, and we're going to give it to the general fund, I believe. Is that what it says? So let's go back and look. The Sedgwick County tax collector acts as property tax collection agent for Wichita 259 and the county general fund. So Wichita and the school district are charged a 1% collection fee, which is passed on to the county's general fund as revenue. So the 1% fee would be 1% of this amount. So 200,000 times 0.01. So they have to pay a fee of $2,000. So they are only going to get 198. They are going to pay a fee of $1,200. So they are only going to get $118,800. I think that's right. And then they, the county general fund, is going to receive the fee. So they get to receive the fee. So they, instead of getting 80,000, are going to get 83,200. So this totals 400,000. This totals 0. Fee, receive the fee. And so if we add these three up, they should equal 400,000 because that's the money we have to distribute. 198, 118,800, and 83,200. So we're going to receive a total of $400,000. So when we receive the $400,000, it says during the first 6 months, 400,000 was collected. So when we receive that 400,000, we are going to give it to these three entities just like that. So for the agency fund, we were waiting for this to happen. We have taxes receivable and due to other funds. So all we're going to do is receive taxes receivable to other funds, and we're going to receive the cash, 400,000. So we received some cash. Man, it keeps telling me this. Remind me again in an hour. Okay, so we're going to receive that 400,000. And so now the balance in taxes receivable to other funds is only 100 because that's how much we're still waiting to receive. And right now we have 400,000 in cash. And so then what we need to do is we need to turn around and give out that money. So what we're going to do is we have an account called due to other funds, but we need to be specific. So we have due to other funds. So what I'm going to do is I'm going to debit due to other funds for 400,000 so I can give out the money. And I'm going to give 198 to due to city of Wichita. I'll just put Wichita, that's fine. Due to USD 259. And due to the general fund. So county general fund. So 198, 118,800, and 83,200. So then we're going to distribute the money. So I guess I called them a little bit different, but I'm close. So then I'm going to give the 198 to Wichita. So I'm going to eliminate this, and I'm going to eliminate this, and I'm going to eliminate this. So those that get eliminated, and I pay out my cash. So when you think about this, what happened is my due to other funds account is still sitting at 100 because I put 500 in there, and then I received, I eliminated out the 400 to specific accounts, which then I immediately eliminated to show the cash coming out. So now my cash balance is 0 because I received 400 and then I paid out 400. So these all cancel each other out. So if we want to look and see what it looks like at the individual fund levels, and so these are the three people that received money, we gave the 198 cash to the Wichita General Fund, but they were waiting to receive 200,000 because that's what they were going to receive out of this. This is what they earned out of this. But 2,000 of it was a fee, and so they received cash of 198. They were going to get 120, but they paid a fee, so they got 118,800. And they were going to get 80, but they received the 3,200 fee, so that's revenue. So they received 83,200. I love that. I think that's really clean and nice. And so the rest of the notes are just talking a little bit through the other kind of trusts like PIPA. Like, so we just did the A. We did the A of the PIPA stuff. And so the financial statements required are a statement of net assets, which is just a balance sheet. So right now, like in this particular fund, we have one asset and one liability, and it's $100,000 because we planned on 500 and we received 400. And so we'd have a due to and a receivable of 100,000. And changes in net assets means if there's any change in like the fund balance account, but there wouldn't be really. And so there's no income statement because there's no revenue or expenses coming in and out of the fund. And so it's just a really weird set of funds. We do have investment funds, and that's where we are going to be like managing the pool of investments for a like maybe the retirement accounts of the city employees or something. And so those journal entries are going to look pretty similar to what you would do in financial accounting. So the book didn't spend a lot of time going through it. So they use the full on accrual basis using basically regular GAAP kind of entries. And so so that's pretty much it. And so there's just some conversation here about like what you would do for notes and things like that. And so that's chapter 8's notes. To do chapter 8 homework, let me pull up chapter 8 homework just so we can look at it for a minute. 9 homework student. Looks good. And so there's some multiple choice. And so those are for chapter 8. And then there's one problem from 8 and one problem from 9. So your homework is pretty light. The chapter 8 homework, you're going to basically have this money. I do a weird thing here because I want it to round so that when you do the allocation, it's not like a really weird number. Because if you don't round this, if you just do 10,333 divided by the 24843, you get 41.59, but I want it to round it to a whole digit. So what I do is I use the round function. And so the round function, it says round, I'm pointing at my screen like you can see it, but round, and then it's like, what number are you trying to round? And then you just do comma and you say how many digits. And so I'm going to say, if I say 2 digits, just to see what that would be, it would be 42%. If I do 4 digits, it's 41.59. So I'm just going to do it to 2 digits. So it's a nice whole number. And then I need to make this one smaller because when I went to print it, it did something weird. So I'm going to save it like that. Okay, so you're going to do the tax agency funds entries. You're going to do that allocation with the fees, and then you're going to turn around and you're going to get rid of the payable and then pay out the money. And then you're going to look and see what it looks like for other entities. And so it should be a pretty clean problem. And so that's it for chapter 8. So I hope that feels good, and I'll talk to you soon. Thanks.